long-term investors, thank you very much. Long-term, you know, very like Hansi Hansmann, who is doing his business for quite a while now, and VCs. And I always try to introduce you to that not the one business angel or the other business angel and the investors are all the same and act the same. So everyone behaves differently, everyone acts differently, people search for different things. And today I'm very excited to introduce you to a couple. So it's also a first time for us to have actually two guest presenters at the same time here. So they are doing a, how do you say, German Doppelkonferenz today for us. And a little bit to the background. So Karin Kreutzer brings experience, actually long-term experience in industry. So she worked her way through coming from industry, founding her own PR agency, and Stefan Artner has a legal background, so he's a lawyer, attorney in law. And so how does it go with your, so the attorney in law and daughter is, you are the partner and head in
I'm a partner and heading, in fact, our real estate practice group.
Okay.
So
Thank
nothing really to do with startups there.
Yeah.
Not yet.
And in 2015, they co-founded AUBMES Invest GmbH. And basically since then, so I don't know how long before that, but since then definitely you act as an investor and business angel. And you basically dived into a new field of expertise yourself. And you share with us, you know, what it looks like for you, your learnings out of that, and how you actually can give away and pass on insights for our interested audience here today. So I think from my side, I would say I pass on my word to you guys from that moment. Stage is yours. Thank you very much for coming, and I'm really curious. I'm really curious about your today's journey. Thank you.
We're curious too.
Voice? No?
Yeah. It is for recording.
Ah, okay. Ah, it's for recording. Okay. Yeah, and our mission for today is to show you that startup investment take more time, much more time, and why it takes much more time than 2 minutes, even if you not need 2 million. And yeah, and we will show you a little bit the view of early stage investors as we are. So we will go through 4 areas.
Perhaps just hello also from my side. just hello, here I am. Sorry. Very warm welcome. First of all, it's very important. This is the only spot in Vienna where it's sunny today, and it's spring. Second, those being curious what AUBMES means, because this is why I wrote this here in old style, non-digital letters, as you said. AUBMES means, it's only a word which works in German, because in English it would be AUBMES, which is quite strange. It means all our investments may be successful. Alle unsere Beteiligungen mögen erfolgreich sein. So this is the secret behind our company.
Yeah, and do you know Mr. Vlašek? Anybody knows Mr. Vlašek here in the room? From Billa?
A great property investor,
he was our role model because Billa, billiger Laden, and his real estate companies, Amisola, ist alle unsere Immobilien mögen erfolgreich, ohne Leerstand sein. Okay, but before we start going through this process, I have 3 questions. The first question, do we have founders in the auditorium? Ah, okay. Do we have investors in the auditorium too? Welcome, and please suggest us, support us with suggestions. And is somebody here who wants to be a founder in the future? Okay.
Okay, that's good. That's great, yeah. Absolutely great, yes. Go ahead with that, yes.
But now the question to my husband, do you remember when we have our first contact with the startup community?
Yes, I do, of course. Yes, back in 2015 we had no ideas of startups. Karin, more or less by chance, was invited to a pitching event, and I think you never saw pitches before, and I was on travel and joined Karin in the evening. Was really thrilled by the startups there, because so much positive energy, young founders, so interesting ideas, and the discussions were so interesting that we said, okay, we really have to start our investments on our own. It's something totally different from what we do in our daily business. So this was more or less how AUBMES was born.
Yeah. Yeah, so we started to dive into the scene. We made friends and we visited different events, and yeah, and we met the first startup founders. We said, wow, cool people, cool ideas. Yeah, and then we founded AUBMES. Why we founded AUBMES? Because we want to separate our investments from our private sphere and from our other businesses and other investments. And then, yeah, we made our strategy.
Our first strategy,
Yeah.
yes. But we will, the journey today, I don't know whether we stick to our timetable, but we'll be showing you from research to pitching to legal work how investors cooperate and communicate with the founders. But what was the strategy that we set up for ourselves? And everybody who is starting a business, also very important, of course, for a startup starting a business, is what is our strategy, what is our mission, and what do we want to achieve. And I can tell from our side, we are perhaps a little bit different from those other people that you heard here already, because we are a very small company. We are investing our private money. A different type of business angel, like some others, are very different from VCs, who of course do this as a profession, and we do a little bit with another background. So we said, okay, with our privately earned and taxed money, we cannot go into one industry, so it's more opportunistic where we invest. So you will see in our portfolio, which you see on the website, it's totally different things that we have. We have hardware there, we have communication assets there, we have RegTech there, we have one Bitcoin platform, so the range is very wide. We invest early stage, so pre-seed and seed, because this is where we see that we can give an added value to the founders and to the new startup. Having our ideas, being sparring partner for the startups. Although we say we do not work for equity, so there's no sweat equity that we agree on, because we say we work sufficiently, so we give our advice for free as sparring, but we want to have a fair investment in the company. What is our budget that we have? Our budget is between 10,000, which is on the very low level, to 50,000 for the first investment into a startup. So as you can see, we are not usually, we are not at all, in no case, a lead investor. There are structures, and you may have heard that from Hansi Hansmann. He goes as a lead investor into a startup and has his investors in the background. And we say, okay, now we have a team of investors who need to work together, of course. This is not easy, but it always needs more, not only for the money, but also for the different for the different input that each investor can give. What is very important for us is, of course, team of the founders. So we do not invest into single founder startups, because we think that it's very difficult for one person to do this very complex business. You have to do the technical development, you have to do organization, you have to do sales, you have to do investor relations, and all of that is too much for one person. And we see it there is at least one startup that we are invested where founders have left the company, so this is really an issue because you have to find a successor for this founder to take over the tasks which are now too much for the one remaining founder. What else is important? Of course, target, exiting. We are not giving our money for free, so we expect to have a yield, we expect to have an exit, and of course, as we start early stage, our time plan is between an exit between 5 and 10 years. If it's earlier, okay, but we do not expect it, and we really see this from practice.
Sorry.
We really see this in our experience that it always takes longer, as you may think, even both as a startup and as an investor. And perhaps just to give an idea what we also adapted in our strategy, we had our direct investments. We also are investing directly and together with others over escrow, over trusteeships, but we are also investing now. We changed our strategy into VCs so that we have a different diversification in our portfolio, because we said, okay, we have now 8 early stage startups. There must be some more diversification, having a wider range and at different levels of integration of the startups.
Tech Innovation was participant in the first season of 2 Minutes to Million. We haven't seen them. We didn't know the show.
We didn't know the show even at that time, yes.
But we will show you now a clip about the development of tech innovation. It was sent this March at Puls4, and yeah, we will show you a little bit the reality of the show and the reality of the reality. So yeah, let's have a short movie. Hopefully. One more click. Okay.
Millionen in Riesenschritten zum Erfolg. Dies gelang auch Kevin i²c, der mit seiner Idee, einem sehenden Schuh zur Unterstützung für Blinde, in der allerersten Staffel vor 6 Jahren angetreten war. Er war Teil der Erfolgsgeschichte der ersten und größten Startup-Show im deutschsprachigen Raum. Sein Auftritt im Puls4 Center veränderte sein Leben.
Der Auftritt, da fühlte ich mich natürlich sehr nervös, das erste Mal im Fernsehen. Man hätte vieles anders machen können, aber ich bin zufrieden, so wie es gelaufen ist.
Dieser Schuh erkennt eben Hindernisse vorne, auf den Seiten, hinten und gibt ein ideales Feedback.
Der Prototyp des HTL-Schülers überzeugte Investor Daniel Mattes, 25.000 € in die Weiterentwicklung zu investieren. Kevin fand außerdem über die Show den perfekten Geschäftspartner.
Nach meinem Auftritt bei Puls4 hat sich dann der Markus bei mir gemeldet, weil er das Produkt so cool und spannend gefunden hat, um hier mitzuwirken. Und wir haben einfach gesehen, wir ergänzen uns gut, weil er ist Wirtschaftsjurist, selbst auch blind, somit auch der erste Tester in der Prototypphase.
Ich habe ihn gesehen, dass er damals eine geniale Idee hatte und ein Konzept, aber kein Team, das dahinter steht, keine Struktur. Mich hat die Idee so fasziniert, dass ich ihn dann daraufhin kontaktiert habe. Wir haben uns sozusagen im Unternehmen das etwas aufgeteilt, dass der Markus den wirtschaftlichen Part übernimmt. Und mein Part ist es, hier in der Technologie was weiterzubringen und den Schuh auch technisch gesehen auf den Markt zu bringen.
In den letzten Jahren ist es dem nunmehr 8-köpfigen Team gelungen, aus dem anfänglichen Funktionsprototypen ein serienreifes Modell zu entwickeln. Hans-Peter Haselsteiner hat das Projekt zusätzlich finanziell unterstützt. Kevins sehender Schuh ist mittlerweile patentiert. Die Innovation aus Österreich ist mit seiner hilfreichen Funktion für Blinde weltweit einzigartig.
Der wichtigste Step bis heute war wahrscheinlich das Investment. Ohne dem Investment wären wir heute nicht hier, hätten auch keine Mitarbeiter. Natürlich gab es viele kleine Erfolge bis heute hin, aber der letzte, wichtigste Step ist die Testphase, die wir jetzt gerade haben.
Und wir sind stolz, dass wir einige Personen, die in dieser Testphase drinnen sind, schon überzeugen konnten, ja, den Schuh vorzukaufen, die jetzt freudig auf die Endversion auch warten. Im Moment arbeiten wir gerade noch am letzten Feinschliff, der vor allem den Verbau der Elektronik im Schuh anbelangt. Und also sobald wir das CE-Zertifikat offiziell in der Tasche haben, können wir mit der Serienproduktion beginnen und die ersten Schuhe ja, hoffentlich in den nächsten Monaten ausliefern.
Good. So the first information, Daniel Mattes did not invest in tech innovation. The second information, Mr. Haselsteiner invested, but not via 2 million, 2 minutes, 2 million. He invested via a bank, via the bank consultant as Andrea Bastian. She is consultant for Mr. Haselsteiner and also for tech innovation, and they connected them. Yeah? And the three and the most important thing, that's true, Markus saw the show and called Kevin, and now they are co-founders, and this was really important. Yeah? Even the investment, of course. Yeah? But yeah,
So the first learning actually from this TV show is that when you see the TV show and say, okay, now it's agreed, and now it's Mr. Haselsteiner,
and everything is easy,
everything is
and
easy,
we
and
love
now
each
yes,
other.
we commit and we give 200,000 euros for 10%, and everything is fine, and you have a handshake. This is perhaps the start of a journey. It's not committed, it's not signed, and it takes at least some months if they really agree to an investment. So this is very important to distinguish between, of course, TV show and reality. But it's real startups. That's something that we can confirm, and we have seen many startups in the show which we have been presented earlier. So it's not like I think there is one show
In Great
I've
Britain,
heard
yeah.
in Great Britain where it's totally show that even not the startups are true. So not even, of course, not the investments. So this is the first learning, that this is not a reality. Our story now, if we take the example of tech innovation, is how long did it take for us to invest with them? We saw them first at a pitching event of the Austrian Chamber of Commerce, which was a very exhausting day because we had 6 pitches an hour, and this started 9 in the morning until 6 in the evening. So after 30 or 40 pitches, you don't see anymore the differences between the startups. And then these 2 guys came up on stage. They did not have a really pitch deck, as you may know.
I was really tired, yeah.
I was really tired. 2 people on stage talking 10 minutes and just having 1 slide in the back with the shoe. No more information, no clicking, no nothing. And this was really something, okay, it's interesting. Apart that the product interested us, so we started discussions with them.
And they talked in a very easy way, yeah.
Yeah, yeah, it was a very natural way that they talked, and we had discussions with them afterwards and said, okay, we're interested, and they said, yes, we are looking for investments. And then it took some weeks or even months, and we said, yeah, we would like to commit ourselves. And then they stopped the conversation because they just wanted to go with one investor, taking a major share. And then I think they were about 2 or 3 months off the discussions with us, and then they came back because
I met Brigitte Nessler at an Investorinnen lunch, yeah, and they said, okay, yeah, okay, and I can understand that we put together.
That we put our money together, and finally it really took between 10 and 11 months from the first contact until the really signing of the agreement and payment of our investment for tech innovation. Some of the learnings and of the pitfalls that we experienced in this journey, in our first investment, is something that we will share in the next 30 minutes with you.
So, 4 basic recommendations for founders when they're searching for investors. Take your time. It will need longer than you think. Matching. Don't think only for the money. Think about the value, the sympathy, the experiences, and all this.
And the different competences that the investors have. Because it's always a task to see, okay, which investor can give what kind of input. Is it entrepreneurial input? Is it a network? Is it legal advice? What startups expect from my side, and I always say I don't sell legal advice to you. I'm investing. So it's really clear to make a decision who is contributing what, and also a selection process for the startup. Which investor do I take, and which is the best investor or the investor team for me as a startup?
Yeah, but also think about the number. Yeah, how many investors do you want to have on board? Sure, only one is simple in communication and in collaboration, but of course we have only one hand for networking and for supporting you. Yeah, so I think it's better to have more angel investors on board. Yeah, but yeah, we would recommend 2 to 5. Yeah, but now but synthesize them.
Yeah,
the legal part.
What we have experienced is we have also invested in startups where there have already been, let's say, 10 or 12 investors, and then it's us and some others joining as the investor team. So you're sitting here as a startup with having 15 investors on board. This is a discussion club. It's no a shareholder meeting. It's a really discussion club. Everybody feels important when telling something in the meeting, and you don't really get a decision. And if you want to go ahead and say, how do we structure our financing? There will at least be 1 or 2 people standing up and having concerns and having different opinions. So if it's too many shareholders, it's really difficult. So think of how many shareholders you need, and if possible, try to have the shareholders syndicate with each other so that you have one person who's having the relations to you, who's the spokesman of this investor team, but not having too many investors. You will really have an issue for the next financing rounds.
And the last point, when you find an investor, don't think that now everything is fine and we have money a long lifelong. Then after the financing round is before the financing round. You always need money.
Yeah, what we can say is there's a period of 12 to 18 months that the startup usually has a runway with the investment they get. So they get money, and they know that at least after 1.5 years, they will again need at least another significant portion of money. So as soon as you have received the money, you know perhaps we have 3 or 4 months time, and then we have to start searching for investment again.
Yeah, and what it's important for investors too is not only the pitching, yeah? It's the talk after the pitching sessions. And I think that's the most important thing, yeah?
Yeah, absolutely. You see the pitches, everything is fine. You have the sunny world like here. But then it comes to the personal discussion, the personal impressions. And what is important for us to have a discussion on eye level with the startups and with the founders in both directions. I don't want storytelling in this meeting. I want to really know.
Everybody will tell you storytelling is the most important thing in life. My opinion, no. Yeah? The true story is the important thing, yeah? And of course, bring them in a nice performance, yeah? But not create a fairy tale, yeah?
Yeah. So what do we do, of course, in discussions? We want to have the founders explain the business model, explain where is your USP, why do you think you are the one selling this product and not your competitor. What is the market? I think one of the most dangerous things is if a startup says, no, there is no competition. We're the only one in the market. Because it's in 2 directions dangerous. One, perhaps he doesn't know the market and hasn't done his research. It happens. And this happens really very, very often. Second, if there is no market, it's much more difficult to bring a product to market, because you have to create the market, which is very, very difficult, and don't underestimate this task if you're having a really disruptive startup saying, okay, this is the first time. it may take you 5 years to create the market, and then you don't have any more market, and any other startup will take over the position and become the market leader.
And I like also the question, how will you sell your product? Yeah. Okay, selling. Everybody will come to me if I put it into the Facebook. Yeah. No. Doesn't work.
So organization is something that startups don't really think of in the first moment. How do we organize our company? Second, what competences are we missing? Also a very important question from our side. Because not all the founders. Some founders think they know everything. And it's important to know where the own competences stop, and you need support. It's not help, but you say, okay, I'm not a salesperson. That's okay. If you're the technical developer, if you're the genius on the tech side or in the networking, it's fine. But who does the sales? Who does the operative work for sales? If you need a person there, you have to find a person there, and you have to finance the person. And if you know this, you can work on this issue.
And even if you are a good engineer and you're on your border, please tell it, yeah? And then we will find together a solution. Yeah. And
So
then, equally important for us is that the founders give some questions to us, yeah? And here a selection of some questions. And I like, do you prefer to be invested as a lead investor or as a co-investor? That is one of the questions I think that are really important. Another
You really have to evaluate the pros and cons of the two. But what we told here, having 2 to 5 investors may be good for you, but may not be good for another startup.
How do you personally assess our market opportunity? I think, yeah, it's a nice question. It shows me that they are interested in not only in my money. Yeah, I think for founders it's also important you sign an NDA, because a lot of investors didn't do so in our experiences. Yeah, and does our ticket size fit to your expectations?
Question?
Yeah? Yep. Yeah.
They make use of the market position. If there's a startup who is unexperienced and said, okay, we are frank and we want the money and we tell our story, it's quite difficult to find the right way between keeping your secrets and preparing a due diligence for an investor. So that at least, what I say from a legal point of view, I'm not here as a lawyer, but as an investor, but from the legal point of view, the minimum standard actually is an NDA that you would have to sign with anybody showing your business secrets.
Press, no. But yeah, you should think if there is a good basis for cooperation when they say no DNA, no?
If there is investor saying, well, I want to overrun you, I don't sign anything, think of whether it's a correct investor.
I mean,
it's business practice to sign a confidentiality agreement. So there may be some reason behind this decision of the investor not to sign something, not to be bound. We will come to the times when investors just walk away from a deal and what happens afterwards.
and very helpful is, after such a talk, to receive a one-pager by email.
Can of course be a 2-pager or
Yeah.
a 3-pager. It's not necessarily 1 page,
But not the whole pitching deck, yeah?
yeah.
Or the whole business plan. For the first, it is nice to have such an executive summary.
It's 2 different examples that we've
Yeah.
brought here. There is no real standard on that. We have seen
And it's
so
not
many.
actual, it's old.
It's old.
Yeah.
We're allowed, but they may be very, very different. I'm just searching because I have one here. I can show you which is.
Was hast du?
Another one-pager here.
Ah, okay. An actual one.
Yes.
Interesting.
Sorry, didn't find it. Because I just wanted to show that it can be very different from the layout. So it's just to make a decision what's your points that you want to transport to the investor, what do you want to get, and what shall be the response from the investor when compiling such a one-pager.
So, there are 3 results of the negotiation period: no deal, postpone, or the deal. And when you say deal, then only the legal part will start. Yeah, and yeah, you have to say something to the no deal, you told me.
Yes, my experience, because in my first life, I always say my first life is my lawyer's life. My daily life is being in negotiations and trying to bring people together, 2 sides together, and to make the deal. What I see from many processes, it's always starting with an NDA and with a term sheet, and you agree already on something, and it gets more and more difficult to walk away if you have once committed, even if not legally binding. You have to be aware that this is how we work as humans. So if we have something, and if you have a coin of €1 in your hands, you don't give it back very easily. If you don't have it, it's fine. As soon as you have it in your hand, you don't give it back easily. And the same is with all these investment procedures. So walking away is really a decision. You have to lean back and think, would I have invested if I had known this, what I have just experienced now, if I had known this 2 weeks ago? And if you had known this 2 weeks ago and say, well, never, then you say, okay, then let's think of it whether it's the right time to walk away right now or not. But always have in mind, this is like humans work, and we are all humans, so be prepared to lean back and think of walking away.
So, now, 4 recommendations from us for starting contract negotiations. The first thing, take a good lawyer. Yeah, and
it's not promoting my business,
no.
but it's I wouldn't promote myself as a startup lawyer because I'm doing a different field of work. But it's a very complex area. It's a very difficult situation to manage different aspects of the investors, of the founders, and to bring all this together to an outcome, which is an agreement. And the agreement is also very complicated. So you need something who can moderate, who can take the people to the side and evaluate whether it's the right approach or who shall concede what. So having a good lawyer, having market experience is a very good decision. And it's not always the cheapest.
Yeah, not always the cheapest, yeah. And think that a good lawyer will consult you for a long way, not only for the start of your startup, yeah. So it's really important that you trust in this person. Yeah? And for us, we feel also more comfortable when the startups have a competent lawyer, yeah.
I was to our startups, I give the advice, and I know my colleagues and say, I'm fine with him. What is the rate he's charging? What is the amount we have to pay? It's okay, but it's more difficult if it's a lawyer is not in the business, and I have to read the agreements and tell everybody that this is an issue that we have here. So I really want to have prepared it correctly
and don't believe that the startup packages of some lawyers are really the price you have to pay, yeah? Because very often they charge much more, really. Really, we have it at the moment, this problem by a startup of ours. Yep. Because you need more hours, more, yeah.
And you have a good agreement. You really have to be very frank, also with your lawyer. Don't have a hidden agenda and try to avoid that the lawyer has a hidden agenda. Make a clear agreement. Okay, what's the result that we want to get, what do we have to pay, and that's it. And if it's 5 hours more, it should be included in the package. But be aware that there may be lawyers who would charge, then even after some time, perhaps not, we're not talking about bad lawyers. There are many good lawyers on the market.
Yeah, there are many, but some bad too. But it's not easy to change, yeah? Therefore, please take your time for selecting this lawyers. Okay, NDA?
Another question?
No? Sorry.
When does the lawyer get on board? Usually with the first, at least, at the latest, with the first investing round. So this is part of your business plan, saying, okay, if you now receive 250,000 euros, how much is needed now for the lawyer for the investment contracts, and how much will we need for the next 1.5 years, and is it included in our budget? So financing by the money that you have, either it's your own money, the famous family and fools money, or it's the investors' money.
And then?
Signing an NDA, we also already touched this issue, talking about costs, and finally, of course, the term sheet. Why is the term sheet important? Because the term sheet is not yet the agreement. Agreements are very long. The startup founders are usually not lawyers, not used to working with such long and quite complicated documents, but the term sheet is often not in a very legal language, just having certain headers and certain agreements, and this is the basic economic evaluation of both parts, and you can easily find an agreement by discussing a term sheet which perhaps is only 2 or 3 pages long.
And if you are sure that the founders and investors want to have a company together after setting the term sheet, you can start with the real contractions. But even if you think everything is clear, everything is easy, no. When there is the legally binding, new emotions come over and over, yeah? And you need, again, a lot of time. Oh, yeah, that's why
we skipped some important points in the term sheet. So what is usually part of the term sheet? Of course, the investment money. So how much investment do you expect? How much percentage of shares do you want to give for that? This is what you usually see on the TV shows in 2 million and 2 minutes to million. But it's also other issues like what about stock options for employees? Because it's an important issue for the founders to get good people on board. You don't have the money perhaps to pay them immediately, but you would give them stock options so that they participate on the success of the company. For the investor, very important are minority rights, meaning veto rights. What are the major decisions that a startup might take where the investor wants to say yes or no? Not to the bad of the company, but actually for the good of the company, because we want to achieve a goal, and perhaps the investor or the shareholders are more experienced with such extraordinary decisions. What else do we have? We have some more important issues. Timing. Is there an exclusivity period? Do you want to say, okay, for the next 2 or 3 months we are only discussing with you, or do you need to be open to have discussions in parallel with other investors? Well, confidentiality might also be in the term sheet, of course. What else could be in there, like agreement on share selling rights, like so-called tag-along and drag-along rights. I will touch this issue later, but who has which rights when an exit is approaching on the horizon.
And last but not least, be aware everybody can walk away all the time until the signing, yeah? Even if you think everything is clear with the term sheet. And now we go to the contracts. Yeah, we have experience on both sides.
It on both sides, yeah.
We won.
Yeah, we
The
had one
third
experience that we are both thinking of is we had an investor who wanted to really invest a huge amount of money. I was cautious, Karin was cautious and said, well, be aware, it's not really the type of investment this investor does. He has the money, that's okay, but it's not really his experience that he does this. And we had good discussions, and he said that he will think of it, and our founders were really sure they would take this investment, take the portion. And then after a weekend, the investor called the founders and said, no, it's not really my business. Perhaps later on I will take a share. If you do your investment, I will put another 150,000 or 250,000 into the company later on, but for the moment I'm not the right person.
And he took it so personally, yeah?
The problem is that our founders took it personally. They really had a crisis there, not getting this investment.
But that's really normal in business life, yeah?
So always have a second and a third route in parallel, not having just a discussion with one investor, even in particular not if you're getting short of money. If you need the money, perhaps not put all your money or efforts onto one horse.
Yeah.
And we also walked away. We had a discussion with a startup where we saw that they had not done the market research. There is a team member actually missing. It was okay, this is important things for us missing. We are not the right ones. Search for an investor who can help you with the market research, who can help you with your sales, which was an important issue there.
But he is resilient.
He was resilient and he really
said, okay,
didn't take his personal, but...
let's be in contact, maybe we postpone it. So now to the contract types.
Yeah. Don't want to bore you with that, but just to give an idea what types of agreements you would sign when it really comes to the investment round. There might be an investment agreement or a framework agreement all over the investment telling who will take shares in the company for what portion. So it's actually for the moment of being and for the investment, and how do we get this into the commercial register. Second, very important is a shareholder agreement. Shareholder agreement providing for the rights among the shareholders and between the shareholders being the founders. This is the important issue here, because all of these are then shareholders together, and who has what rights. And if you hear somebody's taking perhaps a 25% plus one share, this has a legal background because this is in the law that this gives you certain minority rights, but you can also provide for that in an agreement, of course. And if you don't have 25% together, you can have those rights in the agreement. So that is why a shareholder agreement would be very important. Third one, every company has articles of association. We have many limited liability companies, GmbH, in Austria, which we personally do not deem the really perfect form for an investment of startups, because it's very formal and very costly to keep this GmbH and to keep this investment round. So you always need a notary there, and a very difficult set of agreements.
Hopefully there will be an AG Light in the future.
This is what we really propose, to have an Aktiengesellschaft Light, would give an easier opportunity to find certain investments, like das genehmigtes Kapital heißt es auf Deutsch, sorry. So have a capital which is agreed and which we can then place on the market. For the GmbH, you always have to have your 2 or 3 shareholders on board signing the investment at this time, which is quite difficult.
And you need a lot of notarial certification.
Of course. Why is the Articles of Association so important? It's inter alia for the moment when there is an exit coming. I told you about these tag-along and drag-along rights. What does this mean? If the founders think it's a very good idea to go to the market, to expand or to have an exit, they might think of, okay, we could now sell our 70% of shares, but no investor would take this. because they will remain an investor in there of 30%. So the question is, how can we drag along this 30% and sell 100% of the shares? Very simply spoken, it's not like that in the agreements, not so simple, but this is the idea between a drag-along right. The other way around is the investor. I have invested perhaps 5% in a company. I just want to have my share. I'm believing in the company, in the market idea. And then the founders make an exit. They simply sell 95% of the shares, and you're left over as a minority shareholder having no rights. You would like to say, well, if you're making this good money selling your 95% of the shares, I want to take my shares, give it to you, and you sell my shares together with yours. These are the drag-along and tag-along rights that are in such agreements. What else do we have? We have, of course, liquidated preferences saying, if I'm investing as an investor, I want to get my money out first. Before any founder gets the money from an exit, I want to have it as an investor because I gave my money first. I want my yield. And if you have a good exit, then of course, also the shares of the founders are sold. Finally, be aware that know-how is very important, not only for the due diligence. This is why the NDA was so important from our side, but also as an investor. Be sure that the IP rights important for this product, for this startup, are in the company themselves and not perhaps with the founder. We had that case where we needed a patent transfer agreement so that the founder transferred the patents into the company. Second, check whether there are third parties having rights in your patents or in your know-how. If there are third rights, you really have to resolve this first before you do your investment. So that is why there may be many side agreements, but always have a look at the IP and the knowledge of the company.
What I have learned during the negotiations process is that a lot of founders think with the investors they get cheap consultants or long life sponsors, and that's not true. We want our rights. Yeah, we are not business mom and dads. Yeah, and I mean, perhaps to see, how do you feel it? Are you more like a parent?
What we saw in the last years is that it gets much more professional and it goes into the direction that you're really a mentor, somebody who takes care of the form of helping in capacity with the network,
Yeah.
give advice, helping people. You have overseen that you're a good caring partner, but you are not
But I
No,
need
no, absolutely. It is a business relationship,
Yeah.
and in a good relationship, there is a position, and the position, as you said, network, giving advice, but not being mom and dad.
So, our experience, like the three emotional sticking points are the transaction requirement approval, the good and bad lever regulation, and the tag-along and drag-along rights.
Yeah,
Always.
tag-along, drag-along, I explained already. Good and bad lever provisions. What does this mean? It's all about the founder team. The founder team is very important for the company. If one founder walks away, it's really a crisis for a startup. So you try to define reasons when and under which conditions a founder may leave. Of course, you cannot force somebody to stay in the company, but if he's just quitting because he doesn't like it anymore, then you can force him to leave the shares back and sell you the shares at the nominal values, for example. Because this is something that is really important for the company. If you really lose one of the founders, then at least you must have the shares to give it to another founder stepping into that place here. And these are the good and bad lever clauses where you try to define what is a bad lever. Bad lever would be somebody just walking away or even more going to a competitor. A good leaver may be somebody saying, well, I've become ill, I really have a personal crisis, I have to leave, I have to resign. So perhaps there's no reason that I have to give back all my shares, but I have earned in this so-called vesting period. Within the last year, I have really tried hard. I've done much work. There's good output from what I've done. I've earned 5% of shares, which are really mine, and the rest are then transferred to the other shareholders.
And it's not only important for the investor, it's also important for the co-founder, because it's really hard to have an old friend who leaves the company and holds a lot of shares.
So agreements is not only about words, but it's really about big emotions, and that is why you really have to keep the team together to come to a really good solution.
Yeah. Good.
Now for something completely different.
Huh? So I think the last part of the process, which can also be very emotional, is the topic reporting, and the topic investors relation. And of course, always you think, how many times should be a founder need for all these reportings and for the communication with the investors, But it's important, And it's not only important because you're not over-controlled by investors, I mean, even if you're a good engineer, for a successful enterprise, it's very important that you are a good businessman or a good businesswoman too. And therefore, you need a monthly budget, you need a plan where you have to go, you need your goals written down and reflected regularly. So it's not only a crazy thing from the investors, But we cannot recommend you a special standard, we have communications through telcos, we have communications through Excel sheets, we have communication through Google Doc with our founders. So you really have to celebrate it and to discuss it with the other founders.
Find out the correct way, actually, how to receive this or how to present this information. I think it's more the contents. And as Karin said, it's really the regular information which is important. It doesn't help me as an investor if I see after 4 or 6 months that we are running out of money. If I see it monthly, we can start discussions and we can say, okay, what do we have to do? Do we need to get rid of personnel for the moment? Do we have to shorten some other expenses? Can we get money short term, or do we try to set up an investment account? So it's really this regular information which is important, not only for the investor, but as Karin said, also for the startup, because you have to organize yourself. And we have learned that not all startups like to organize themselves. We are all very different people. And perhaps I like to work on the product, and I'm really working 18 hours a day on the product, but I really don't like to fill in this Excel sheet with how much money is on the bank.
And it's not...
Or with this, we had discussions to have one point, what went good in the last month, and what is a challenge. Defining for yourself what is the challenge, or what has worked out not well, or has it been a disaster, and writing that down. This helps you organizing yourself and how to resolve these issues.
And really use the investors as sparring partners. We really often see that they bring a lot of new opportunities. And it's not enough to show how great your product is and that you work a lot. Yeah, sure, you work a lot. Chapeau. But it's not enough. You need others to key points.
And of course, as a startup, make use of the team that you have. The investors are your team. So use your team to say, these are my problems. Do you have an input for them? Do you have an input for me? It's always, as you said, you need a sparring partner. and it's always easier to discuss with another person who has a totally different view and say, okay, of course I know somebody. Perhaps talk to Karin. She knows someone, or he has the.
Who can organize you a cheaper car, for example?
Yeah. One discussion. As you said, we had tech innovation was they needed a car to go through Austria to different spots to do not their sales, but to do the product rollout or like a PR tour.
And they say that in planning is
have a new car. It's something where usually we don't spend money on expensive cars. And one of the co-investors said, well, we are just getting rid of our old company cars. You can have it for free just with a logo on it, or pay a small amount of money monthly, and you really saved us a lot of money for this startup. This may mean 1 or 2 months more runway for the startup. This is much. Gaining 1 or 2 months more financing is great. So this is a little example how these investor relations, if they work out, can work out well.
Yeah. So why investor relation is also very important is because it's great the truth and the trust, and it holds the trust, yeah. And you need the trust of the investors for the future, for the further financing rounds, for their recommendations and for their money, of course, yeah. So yeah, communication and investors relation is important, yeah. And of course, it needs time, but please take the time, yeah.
So more or less, this is the end of our presentation. We would have but we won't show it. We have a 10-minute film which we have seen on YouTube, which we have linked to your documents that you can. I think. Do you share it with a? No.
What do you prefer? Would you see it? It's quite funny, I think. Yeah, okay. So thank you. Question after the. Thank you.
Millionen in Riesenschritten zum Erfolg. Dies gelang auch Kevin i²c, der mit seiner Idee, einem sehr...
It's not a long version of tech innovation.
It all starts with the vision, the project, the product, the service. No one has done it before. Unbelievable, it's so painfully obvious. Can you pull it off? Maybe. You're two friends, you are excited. Design a logo, design a name. All fun and games. Design the concept, things get serious. You decide to make this a company. You need a structure, a legal structure. How much will that cost you? In the US, incorporating a company will set you back anything between $25 and a few $1,000s. That's in part registration fees, which largely vary depending on where you are, and legal fees, which vary depending on how fancy you need your first shareholders agreement to be. Your incorporation turns out to be on the pricey side. Also, you need to rent a server in order to develop your product. Therefore, you decide to collect some other people's money for it. This early in your venture, who on earth would give you their money? You will get it from family, friends, or by crowdsourcing it. Usually, a newly incorporated company issues 100,000 shares, which are equal pieces of ownership. You need to decide who will get how many of those. You agree on 40,000 shares, or 40% of the company, for each founder, and 20,000 shares, or 20% of the company, for a well-off family friend who buys them for $50,000. It's called an investment, and at such an early stage in your startup, it's called a seed investment. The money he pays now belongs to the company. If the company fails in the near future, which statistically speaking is the most likely scenario, you will probably never see a dime of it again. $50,000 for 20% of the company puts the value of your enterprise at $250,000, which puts the value of your 40% at $100,000. Not bad. Please sign here, here, and here. Congratulations, you incorporated your company and finished your seed round of investment. A year has passed. You're having a successful beta trial with customers. Time to hire a few more people. Rent not just a server but a small office space. The $50,000 of seed capital only got you so far. Time to collect your first big round of cash. You will do this in a so-called Series A round. You're looking for an investment of $1 million. This time, you're contacting angel investors and venture capitalists, also called VCs. VCs are people who work for venture capital firms, which raise venture capital funds. They take other people's money, which they then invest into young, risky companies, such as yours. Angel investors are individuals who professionally invest their own money into young companies. Often, they successfully sold their own startup many years ago and are now looking to support early ventures. You contacted a few VCs and angels. Some of them you found online, some you got in touch with via friends and colleagues. You sent them mails. You sent them a business plan. Usually, they don't care much for the business plan. They want to see the team. Is it competent? The idea. Is it special? They know it's not easy. What have you already achieved? Is it promising? What could you achieve? Can you dream big? You set up some Skype calls. A bit of small talk, a lot of business talk. Describe the vision. Easy. You've done it countless times by now. They ask you tough questions. Have you heard of that other startup which does a similar thing? How are you different? You spark interest. You have second calls. You have third calls. You meet them in person. They might invest. Time to talk valuation. There is pre-money valuation and post-money valuation. The pre-money valuation of your startup is how you currently value it. The post-money valuation is the pre-money valuation plus the investment you're looking to collect. This is usually the one that you reference when you negotiate, because the investment divided by the post-money valuation equals to the investor's share in your startup. Investors want a low post-money valuation to get more for their money. You want a high post-money valuation to keep a larger share. You suggest a post-money valuation of $8 million. For the investor who would put in $1 million, this would mean a 12.5% stake in your company. A few weeks down the road, there are two offers on the table. One VC offers an investment of $1 million for a post-money valuation of $6 million. An angel investor you talk to offers to invest $500,000 for a $5 million post-money valuation. The offer of the venture capitalist sounds like the better deal, but the angel has great connections in the industry. It's called smart money. What do? You decide to go for both. You tell the angel that you have a standing offer of $6 million post-money valuation, but you would really love to have her on board. She agrees to invest at a $6 million post-money valuation. Great. How's the cake split this time? Let's do the math. Together, the VC and the angel will put in a total of $1.5 million into your business for a $6 million post-money valuation. This means that they will own 25% of the company. You, your co-founder, and your family friend used to own 100% together. With the new investors coming on board, you will be diluted. After the Series A investment, your cumulative share will only add up to 75% of the company. This dilution happens proportionally. Does this mean that you have fewer shares now? No. Here's how it works. Just like your company issued the first 100,000 shares when you incorporated it, it will now issue more shares for the new investors to buy. A company can create shares just like a central bank can print money. The total number of shares of the company just changes, while your number of shares remains the same. How many shares does the company issue? If 100,000 shares are now only 75% of the company, it means that 100% of the company will now be equivalent to 133,000 shares. Therefore, the investors receive 33,000 newly issued shares for their investment. Since they pay $1.5 million for their shares, each share is now valued at $45. Your 40,000 shares are now worth over $1.8 million. Congrats! This whole process of a company issuing new shares to receive cash is called a capital raise. If things go well, the Series A won't be the last capital raise of your startup. There will be a Series B, a Series C, a Series D, and so on. For each investment round, the company valuation will hopefully increase. Also, each time your company takes in new cash from investors, you will be further diluted. Remember how I said that your number of shares remains the same though? I lied. Actually, there will usually be stock splits along the way, which convert each single share anyone holds into multiple shares. Hence, your number of shares is doubled or tripled every now and then, along with everyone else's. The purpose of this and many other things that are determined in the term sheet are a story for next time. You don't care much for legal work anyway. Your primary interest is in growing your business, which is now on track to reach new heights. It has been 6 years since you founded your company. You have successfully completed 4 investment rounds since then. You launched your product by now. Guess what? Customers love it. You're a huge success. The big blogs write about you and whatnot. Most importantly, last quarter, your company has not been losing money for the first time. The business made a profit. Time for the exit. Exiting the company is investors' talk for selling their shares. Everyone who invested cash into your business since the beginning has been quietly dreaming about a big profit. The earlier they invested, the bigger of a risk they took, and accordingly, the bigger of a profit they will get if the company really takes off. There are usually 2 ways of exiting a company: selling to one of the big guys or offering it on the stock market. If you sell out to a big company, the investors will usually sell all their shares at once. You and your co-workers, on the other hand, usually won't. Whoever buys you needs you people to stay motivated to run the whole thing. Therefore, your shares will be transformed into shares of the company who bought you and then made available to you over time. This is called vesting your shares. If you leave early or you don't reach some milestones you agreed on, then you won't receive all your shares. The much cooler way to exit is to become big enough so that you will be able to sell your company's shares on the stock market. The process of doing this is called an initial public offering, or in short, IPO.
What's an IPO? What's an IPO? I still don't know what an IPO is.
Don't believe Martin Scorsese. How it works is painfully easy. In essence, an IPO is just another capital raise. Once again, your company will issue new shares, only that the investor who buys them this time is neither an angel nor VC. It's the public. The day you go public, your company dumps a bunch of new shares on the stock market. From then on, people can buy and sell them among themselves. Furthermore, you now hold tradable paper, almost as good as cash, the price of which goes up and down every day. You can sell your stock into the stock market at market price anytime, with the exception of IPO lockup periods, which are a topic for another time. You floated the shares at a starting price of $64 and they shot up to over $70 on the first day of trading. Due to stock splits you did along the way, you are now sitting on 10 million shares of your company. Your personal wealth is over $700 million. You could cash in, but do you want that? It feels like yesterday that you two just had a vision. Now, you're 1 in a million. There's a lot you achieved and yet endless things to do. Even though investors call it an exit, for many founders it's just the beginning.
So I cross my finger to you. for the exit in 6 years.
So, are you still doing the maths here, or are you ready to ask questions? So, while I'm saying thank you very much for your insight and on your journey and your lessons learned the past 4 years, I would say, or on this journey, get prepared to answer some questions. Who's going to start? Any questions? While we are ready to are prepared to warm up, okay, then I'm the first one to ask a question. I'm used to that. How would you say from your very early start on to now, your behavior has changed with regard to who you co-invest? Is it that from beginning on you actually had your partners or co-investors on board you looked at, or how did you actually find your startups, and did you then afterwards look for potential co-investors? How did that work for you, and how did that change over time yet?
Very different.
As the industries are very opportunistic, is also the types of co-investments that we did. At some investments we were invited by friends who by chance also invest in startups. Sometimes we were fond of an idea, investing there, and were searching for the people putting together the investment round. Others, like we've seen Tech Innovation or others, we had direct discussions from their pitches and evolving ideas. So there's no recipe for us to find our investments.
Okay, not yet, maybe. In the meantime, do startups approach you directly, or is it rather about via pitching events, or like when you are with investors meetings and there's a pitch event? Do they know AUBMES yet, that they actually say, okay, I'm going to call Karin, Kreutzer, cold calls?
Yeah. And sometimes they call us and say, hey, we want you. And I have to say, no, I'm sorry. we are not the best angel for you because we have no competences in your branch and we have no network in your branch, and then we say no. Even if we like the person or the team, yeah. I had this last week.
And sometimes we, if we don't have industry knowledge, we sometimes know someone who might have industry knowledge, and we connect the people. Then, of course, this is what network does.
So how do the people or the startups out there know in what areas and what verticals you're basically investing in, interested in? So how is your portfolio so far? You have 8 startups invested so far?
Yeah. And we are
and
diverse.
you're looking for,
Yeah.
you know, what is the diverse? Okay,
Yeah,
so
diverse. This is one of our strategy, yeah. But important for us is that we have a network behind this. When we can say, okay, we have no competences in your branch, but we know a lot of people, we connected with you, then I think it's smart money, yeah? And we can think about this.
But perhaps how is the decision made that we invest in a startup is another
Gut
story.
feeling.
It's simply gut feeling, and we need to. Usually, I'm the untypical man. I'm purchasing. I'm the purchaser, and Karin would say no. Be careful. So if we agree and we are both interested, and we say, okay, we like the team, we like the idea.
We have the
this
4 eyes
this
principle.
could be fun. Then we go forward.
Mhm.
Yes, my name is Dirk. I take part of the innovation curriculum here at the i²c, and we learned a lot about financial plans and many opinions on investors, etc. What is your opinion? What do you want to see when it comes to financial plans? What's the horizon in time? Is it that you want to see how to survive the next 18 months? Is it a financial plan, a projection for the next 5 years until break even? What is actually the real numbers you want to see? Yeah.
How you will survive is very important.
Yep.
The next 5 years is nice, but we know that it will not be in this way. Yeah.
Okay. Yeah.
Every pitch has this hockey stick. Yes,
Yeah.
and
Yeah,
we're
well,
always here.
that's-
This is year 1, and here is break even in year 2, and these profits are all for us. Yes, so this is something that you must show it. It's important to have an idea how to digitalize or how you can achieve this. But we are sure we are here, and it's very difficult to get here
Yeah.
and not end up like here.
Yeah.
This
So it's
this is what we know in the first
Yeah.
moment, that we perhaps can see what the next 12 months will bring, but after that we will need another financing round and see what happens.
So it's to show what's the business plan, how to make money in the future, what
Yeah.
will be the product, what will be the cash you get in, but the financial plan 18 months or so.
Yeah. I
Thanks.
would prefer 12 months.
12 months.
8
okay.
months, I would say, pooh.
12
Thanks.
months is tough, yes. Okay.
Yeah, I hear you. I hopefully your colleagues too. Oh, yeah, sorry.
No. Do you prefer more like rounded numbers, or do you prefer numbers which are very precise? I mean, they are mostly made up, but precise because you see then the people thought about these numbers, or? No, you don't have 12 digits after the comma to convince us. No, of course, rounded numbers. You have to have an idea. It's good to have it in short term. You must be very precise because you need to know today what is on your bank account and what is your monthly burn rate. This is very important figures, especially in the beginning. But we will then discuss with you whether these figures are correct or what is behind the figures.
But please think we are entrepreneurs too. When you are in contact with a manager from a corporate, he will need a lot of more KPIs and a lot of more numbers, yeah?
Yeah, I think we might be more hands-on, of course, but you're right. Having former managers being used to monthly reporting and figures they might need some more figures and graphs to be convinced that you are doing your homework. You had a question?
But I cannot shout so much. I'm
Yeah,
So we have a microphone.
Just wait for the microphone.
We have time.
Yeah, my name is Claudia Badio. I'm also part of the I²c curriculum innovation program. My question would be, how does someone reach you, first of all, outside, like today, for example, and second of all, I think also Birgit asked you about the industries you're more active in. Maybe some ideas, some examples, so we have I don't know, an overall image of where are you actually? Yeah.
At the moment, we are looking for a tech, legal tech startup.
Yes,
yeah, at the moment, but. Yeah, tech innovation, we have learned. GRAPE is a communication. Startup 300 is an ecosystem.
Unispot is a digital agent for students going abroad.
Bitpanda is a
cryptocurrency
platform. Company is RegTech.
RegTech startup providing commercial register information all over the world.
And Ivana is a real estate.
Yeah, it's an AI company doing texts analysis and data room providing.
But only for real estate.
Mainly in the property business, yes. So this is, you see, the industries are very, very wide. And for the moment, as we have initiated. Karin had the idea, and I had the contacts, and we initiated the legal tech hub.
The normal
Vienna.
life, yeah? I have the idea, here's the implementation.
And the legal tech hub Vienna has started an ecosystem now 1 year ago for legal techs for the whole industry, not for one company as ours, but I teamed up the large Austrian law firms for that, and we are thinking of expanding this even to other countries. But that is why we are currently looking into something perhaps coming out of this accelerating. So is there a legal tech which is interesting for us to invest? But still there are other, if there are good ideas coming up, we had one presentation 1 week ago in the cryptocurrency and mining business, which is interesting. So if it's interesting and we see the team. And perhaps one important idea, if you have a team and you have a business plan, you're always questioning what happens if and what happens if, and if the market goes down, and if you see a team who has a plan B and can think of it, they can think about, if that doesn't work, we would do this, and if they can show from the history that they have done this already, they have started in a very different area and have change the product after the first challenge, you will see, okay, this is a team that can go with challenges. They can do something. This is important for a team, for a startup, always to adapt. I remember that Hansi Hansmann once told about how often one of his very famous startups, yes, this MySugar, how often they changed the business plan from scratch. I think it was 26 times changing the business plan. If you one time take the wrong decision and take the wrong direction, you're out. So this really it's important to adapt to the challenges that are coming. You don't know them already.
But we changed our strategy because when we started, we thought hardware would be fine. Nowadays, no, it's not enough money. We can invest. So
it's nothing for us, at least.
For us, yeah. So, okay, software is the future for us.
Okay, thank you very much. We actually have a startup, so maybe we actually have a startup ourselves, but anyway.
Sorry, so just one.
How people find us? We are connected to some of the market participants. We are members of the AIA. We are on.
We are often at the INITS.
At INITS, yeah. We are on some female founders. That's you. You're involved there, of course, and we have a website. So people who would know us or at least hear from us over our network, they would approach us directly.
And we are part of the AWS. Austrian. We are business angel of the AWS, Austrian Wirtschaftsservice. So we are invited to events. And yesterday I received an email. I don't know the person, but he said, "Hello, Karin, how are you?"
Sending over a pitch deck and an NDA and some other information. Why not?
Yes,
okay, sorry. Basically, the question was, when you want to invest, do you normally, just like the video, just release all the money in one go, or do you set certain KPIs and go, okay, one lump sum, then a second installment, a third installment, or do you just give the whole amount as agreed in one go? And then once you've invested, do you get monthly or quarterly reports from them on how they're spending your money? Thank you.
Different. The second question, very different. Some startups send us the reporting monthly, some quarterly, some no, never. And we have also hello, please.
At least no written reporting. So it's with one or two, it's a bit more difficult.
Can't you force them to, like the condition when you invested, like in the contract?
But if everything is fine, then it's okay for us too, And I mean, this one company is really on a very good way, so we are a little bit relaxed.
You wouldn't force them and bring an action before court. Doesn't make sense if everything works well.
But when we see it in another way, they will pressure the.
We are perhaps not very professional in that way. You're absolutely right.
Yep.
Yeah, and it's easier for us because we can say it's our money.
Yeah.
We don't have to report ourselves. The installment. We do our installments. What we commit in the first time we pay at once, but we would say, okay, the maximum is 50,000 euros, which is our ticket. But we know that there are other financing rounds to come, and then of course there are conditions that we say, okay, if we don't see this progress, we wouldn't commit to any more than that. But we have not. We don't have any plans like, okay, it's 3 installments and we have one now and one after 6 months having these KPIs. This could be something rather an approach from a VC, but not from the two of us.
But maybe we'll do it in the future, That's a little bit of learning, And we are at AUBMES at the 4th year, so maybe we will do it in the future. Thank you, man.
Thank you.
Thank you.
As usual, we request you, request you to wait outside, grab a drink in the meantime until we actually follow you outside to further discuss or have a chat, and whoever wants to talk to me. But we need a few more minutes inside for our usual procedure, taking pictures and actually finishing up. So thank you very much. See you outside.